Microphone check, please, and screen share check. Thanks. All right, let's get started. Windows was acting weird, wasn't recognizing my printer driver for the PDF. I had to monkey around with that. Strange business. All right, this is the Nightly Strategy podcast for August 17th, 2022. Let's get started with the market health check. So we have, today was the first rollover day in a while. The last time we had that was here. It responded with this, but today we had the fail. Small range, close slightly higher than the open, but a bit of a sell-off. So we're at 426. The dragon is marked off here with the peak, the spine, and the lower skin. Here's our PSAR. Tomorrow the PSAR is going to be right at the dragon. These are the two support levels from previous RL10 peaks and dragon peaks over here. So this is a really important support level. I'm going to call that at about 417. That will be a key support level going forward. My opinion was to be out here on that break because I want to maximize those gains. But this is still an orderly rollover, if we're being honest, and a resumption to the upside should happen as soon as it takes out 430. You know, if this were to open here and then break out, that's a automatic re-entry. Because you're right, the top of the price bar from today is right at the peak of the RL10, which makes this an emerging dragon and a resumption of the trend. We're hovering right near the 30-day high, and so everything does look pretty good here. We'll take a look at the 30-minute chart. So you'll notice a little easier to see here the gap down. Here was the close, here was the open. So there was the gap, and it pretty much held that price level all day. There was some buying pressure, but which failed at the end of the day. I don't take that as a positive sign. I just take that as this is a purely sideways day. It almost has like a yin-yang quality to it, down, up, and then back to close right where it opened. And being right in the middle of that 5-day range with a support level right here, that to me looks, this PSAR on the 30-minute looks really important to me. 417 was down in this region right here. This is where that key support level on the daily is. So that extra bit of territory right there is the benefit that you gain from being on the 30 minutes. You get to act just a little bit sooner if you need to. I will notice that this little piece of sell-off here from peak to trough is wider than it was back here. So this little sell-off business today was more pronounced than it was back here. So this is actually a sign of psychology shifting more towards preserving profits than it is trying to hurry up and get in before it's too late. This feels like a market that is fully satisfied, fully saturated, with lack of buying pressure, and that automatically leads to some tactical selling pressure. So be mindful of that. Let's take a look at the sectors. Oops, too much. There we go. All right, so we have the S&P today at minus 0.71. The two stronger sectors were conservative diamonds at minus 0.45 Emerging markets at minus 0.42. The speculative U.S. indexes, though, were much weaker today, with the Russell at minus 1.68, tech at minus 1.14. Treasuries were off another percent to close rate 114.72. Tesla was off 0.8. It's still above the key price level of 900, but that's only got an $11 buffer to the key price level of 900. One to watch for tomorrow: Bed Bath and Beyond. Intraday, it was up like 15%, something like that. And then overnight, a major hedge fund is talking about exiting their entire position, and it was down something like 20% overnight. So that is going to be in play, all kinds of in play tomorrow. So I'm going to see if I can't get a taste of that on Bed Bath and Beyond. Just item from the news that'll be in play. Oops. All right, let's take a look at the underperformers, because that's the ones I really want to be mindful of for tomorrow, in case we get some collapsing. I want to see where the weakness was today. Excuse me. All right, so looking at the sectors first. Again, you have the S&P at 0.71. So you have tech, lithium, and the Aussie dollar to 0.78. The VIX is still giving off price here at minus 0.9. So that's actually favorable for tomorrow. There was no panic selling today that would trigger a premium for insurance. The XLY is consumer discretionary. Then you have the two lumbers, material, commercial real estate, and the FANGs. Here's the two lumbers at minus 1.2, materials minus 1.37, commercial real estate and the FANGs off 1.5 and 1.6. Then we start getting some real pain and suffering here with biotech, Bitcoin, clean energy, wheat and precious, marijuana, blockchain between 3% and 4%. Rivian's nice one-day move yesterday collapsed at 4.7. So then we have ARC Genomics, Global Future of Finance, and ARC Innovation, 5.1 to 5.3. Ethereum off 6.4. Blended large cap crypto off 7%. Now individual companies, Squarespace 6.5%. We have two of our metals here off 6%. That's U.S. Steel and Cliff. Alcoa, our other metal, is at 2.15%. So those were really in play today. Coinbase off 5.5%. Rivian and Robinhood 4.5%, 4.75%. PayPal off 2.6%. So plenty to choose from. Not just the, disruptors, but even things like metals and precious metals and some of the energy complex. To the upside, much fewer to choose from. So this would be the first place we'd look for recovery if the market feels like going up tomorrow. Here's our break-even point. And here's the S&P below the line here at minus 0.71. So we have Mexico and finance off 0.6 and 0.5. Residential real estate off 0.4. We have Brazil, staples, agriculture between 0.4 and flat. Blended commodities 0.4 into the green. Energy 0.8. And then strength in the oils and energy sector here with oil itself 1.1 and oil exploration 1.4. Devon Energy, a nice move today at 0.88. Apple 0.9. Microsoft only down 0.47. So the two tech bellwethers, were better than tech and better than the market. But the metals were a big problem today. Metals down large. Energy up strong. So Devon Energy will be one of my short-term targets for tomorrow. Sniper trade of the day. This was Devon Energy. So here was here's the open. This was the OR3, the opening range 3. The high of the 3-minute bar, the low of the 3-minute bar. When this rolled over and started failing, I get short right here. It immediately reverses. I take the exit for minus 0.5 right here. I let it settle down until I got essentially a COTA 2, and then this resumed to the upside. So I buy it here with the standard risk box. It responded nicely. I was late getting out of this one. I saw strength in the energy sector, and so I think I stuck around too late on this one. So if I were to play a 1, 2, 3 entry, here's the peak. So that's bar 1. Here's the low of bar 2. The 1, 2, 3 exit would be here instead of here, so I would have saved about 0.5. This was a stop and reverse for me because of how sharply this reversed and how volatile energy was. I went ahead and played the stop and reverse. So this one was good for 1R. Here's 1 unit of risk, and then I just took the standard exit at the PSAR with a stop and reverse. So this one gave about 2, and then this one gave about 1.5. So 1, 2, and 1.5. So this brings in about 4.5 today. There was another trade possible in here, but it was starting to get late in the day. We've seen the 2 health checks. Dashboard number 1. We're still in sideways quiet. That's good for the long side. Getting a little bit of weakness after 2 days of downward pressure. That's pulled the 10-day from overbought into high neutral. We still have an exaggeratedly good risk Z. So nothing, there's no extra reason to worry about that. It's alerting us to the possibility of upside swings. The min pains, McDonald's, United Health, and Coke are most attractive to me right now. In the 10-day max pains, clearly Alcoa, Johnson & Johnson are suffering. Tesla's lagging. Biotech is lagging. And even though oil was up today, it still has a long way to recover. So that's why I'm actually kind of optimistic and leaning forward for the oil swing to continue tomorrow. In the Dow 30, lots of dojis today on the small ranges. Alcoa is at 2.5 to 1. Johnson & Johnson at 3 to 1 in the auto framer. So that'll be my early view. Apple had another strong day in here with new breakouts on the 10-day, 1-month, and 3-month high. IBM had a breakout on the 10-day high, and Merck on the 10-day high as well. In the ETFs, just 2 auto framers in silver and in treasuries. No breakouts today. So this was a wait and see kind of day in the indexes. Much more action in the U.S. You can see the mechanical entries here for those few symbols that are on the auto framer. You can see the recommended risks in my risk. It takes the middle value of minimum risk, maximum, and range risk. So it picks like 0.89 because of the range risk, which is between 0.54 and 2.15. So it picks for risk 0.89, the middle value. So Treasuries, Johnson & Johnson, and Alcoa all attractive. In the daily squeezes, quite a few today because of the narrow range in the S&P. I like McDonald's and Treasuries and Alcoa and Pfizer in this setup. Procter's also playable. I really like Microsoft at this level because it was strong today but is still on a squeeze. So Microsoft and Coke, for that same reason, should be on your short list. Tesla didn't really, was pretty squeezy today, didn't have a lot of range. It was more compressed, for example, than on a relative basis the Dow and the S&P were, whereas Brazil had a much stronger relative move. In the snipers, no S&P or tactical symbols for the Godzilla because we've come so far off those recent lows. But not surprisingly, therefore, a ton of popcorn. These are all that are really tightly compressed and all ready to pop, and they're all near the tops of their trading ranges and just waiting for a reason to explode up or explode down out of that nice strong move they've all made. What's it going to do? I don't know, but they're all really, really quiet. That actually favors the upside, to be honest. In the most quiets, there's not a single one of them that has even a normal one-day move. Look how tightly compressed all the super quiet ones are. These are the ones where everybody that owns that is really, really content. That's why I kind of like Microsoft as a target, because you're getting a chance to get it with very little trading gyrations on it, if I can say it that way. I also think you should be looking at Google as a way to get back in if you're not already in it. These two are already volatile on the 5-day and the 1-day. TJX is also starting to make a move out of normality, and so is PGR. So those are the first places I'd be looking at. I think I like Lowe's again. That's the second day that's on the list, and Walmart is trying to make a move as well with a large 1-day range. So I'm starting to look for those things that are cooking first, which are the ones that are starting to pop already. Those are the ones that are attracting traders' dollars right now. There's your sniper stats and tactical symbol stats for our these sniper values. GDLC had a large range today during its sell-off. Brazil was conspicuous by having just a normal 1-day range compared to everything else being very, very quiet. Still being dominated by the summer, although the rollover is you're starting to see where the first weakness would be in the fall. So, if that's the zero line and you have a winter, spring, tips into summer, and then starts rolling over into fall, all of these that are in the summer are still in the upwardish move, whereas all these that are in the fall have already started to roll over and are declining. So these are becoming weaker faster than the ones that are still in the summer. You can make your judgments accordingly. Now we're starting to see weakness creeping in here in the tactical symbols, and only a very few making really strong plays, Merck, IBM, and Apple. This Apple is compelling for that reason. IBM's not too bad now that I'm looking at it. And McDonald's still very strong all the way across the board. Walmart's not doing too bad either. Coca-Cola. These are all your staples and the no-brainers that you feel like guys need to own. Only the real defensive play of utility shows anything like strength, and you can see how much weakness is creeping in on the 2-day, and that's instructive. All right, that's all I want to show in there. No additional sniper trades to show, and only a handful of traders today. Let's take a look at their stuff. Come on. I like what Constantine is doing here. He's taken the sniper trades, and he's using this to make sure that he is being very clear and deliberate on the rules, as they're firing, to make sure that he's getting his entries, that he's recognizing choices that he has for his stop losses and his exits, and places that he's looking at for additional confirmations. So this is a nice way to focus your lens on the rules as you're building conscious competence. This helps you reduce the cognitive complexity by having checklists. So that's very good practice. So nice work. This is less on the, let's see what we got here. On the euro dollar, 3 minutes, and he's able to make some bank today at 1.3. I love the breakdown out of the sideways quiet channel. Notice how those are in yellow, so that's a very tight compression. And now when this thing rolls over and starts breaking, he waits for it to get below the VWAP, get short, and then it just did not fail further, so he's able to get out with a 0.2. He lets this thing settle. There was probably a COTA 2 available in there, but I like waiting for the PSAR flip and then getting paid for 0.5. He waits for the PSAR flip again, gets paid for 0.6, and then when this does not follow through, he gets out quick. That's how you do it. There's hardly any movement in there, big breakout trends, but he's able, by being disciplined and on time, to hit his marks and get what is available. So that's really good work. Here's the 5-minute Aussie from Luke. Excuse me. Here's a nice Z3 pinch, compression, not enough time to get it or the recovery, but when this rolls over again, when the dragon rolls over, he gets short. There are a couple chances in here to get paid. I think he gives it as much room as possible. I think he's hoping to see this kind of move again. He holds on as long as he can while still retaining the no lose plus dinner for 2. That's really just getting paid to buy an option that just didn't follow through. But there was good reasons to believe that this could collapse further. So I like that. There was a reversal opportunity in here that was available. Here he's working on the shifting now to the 3-minute. He gets the Z3 breakout or PSR flip breakout. There was nothing there, so he just cuts it. He waits for like a breaking below the RL270 and breaking out of the reverse pinch right here, so he gets a nice first leg. This can't get through the dragon much and rolls over again, so he gets a collapsing dragon here. Gets paid better. Again, we got a lower high. So when that rolls over and comes out of the dragon, he crushes that for a fraction. Now that it is kind of leveled out, he tries the PSR flip. It wasn't there. Stop and reverse and really gets paid well. This, I just want you to notice when the Z3 lines pinch right here, this was a potential breakdown for a second position, but that's 5.8. That's pretty nice work and really respecting the direction of the trend. Notice how the RL270 keeps showing you the way to go. The dragon does that as well. So really nice work. All right, that's everything we got for today. Let me just double check, see if there's any other ones posted in the last minutes. Nope. We'll get this published and posted and be ready for them tomorrow. Tomorrow I'm expecting fireworks that, today the market cleared its throat and said, we're taking a pause here. Now, we'll see if that means the bears are going to wake up or if the guys had a one-day pause and are now ready to keep this thing going. So, to me, the more likely move is down because there was just no buying pressure whatsoever today. Metals, I'm expecting to have a lot of movement in there as well to the downside and energy to the upside. So there we are. We'll get published and posted, and we'll get them tomorrow.